Let's bring in our headliner today, Anthony Scaramucci. He is the managing partner at SkyBridge's Capital. Anthony, it's good to see you. Welcome back.
Good to be here, Scott. Thanks.
So you talk to a lot of big smart money, so-called smart money. What do they think about the market right here and right now?
Well, listen, I'm sort of in Liz's camp on the market. I think that you've got a little bit of overheating, but not a lot of overheating. And frankly, you can't get the inflation numbers that would scare the Fed without wage increases. And so we've been debating all week on CNBC about labor shortages and supply shortages related to labor. But if you actually look at the wage data, Scott, it's not moving. It's been sticky flat, if you will, and in some cases sticky downward for middle and lower income people. And so until you get wage growth, you're not going to set alarm bells off at the Fed. And so I think the bull market is very much so intact. It feels like a Goldilocks situation where you're getting some price increases in commodities, and it's going to lead to an acceleration of likely 24 months of economic growth. But you don't have the inflation that would scare the Fed at this time, which is a reason why I think you're going to see a cycle back into those growth names that some of our panelists want to avoid.
But the fear, though, to what you just said is that you're going to have wage inflation to entice some people to get back to work. And then you're going to really start to have some more sticky inflation. And you're already seeing some major companies like McDonald's, raising wages, and you've seen others do the very same thing. The thought process is that maybe you're going to see even more.
Well, listen, that's going to happen in a weird way. It's happening in a black market sort of way. I'm obviously in the restaurant business in New York. It's hard to find people at certain prices. And remember, if you're paying $15 an hour for the dishwasher, well, then the sous chef's got to get $22 an hour. And so you're going to move the pricing umbrella for everybody when you raise wages. But I think the mistake that people are making is they're suggesting that blue-collar people would rather sit at home and collect welfare. I honestly don't believe that. They're just super creative. Some of them have cash jobs, off-the-books jobs, black market jobs, if you will, and they're out there working. And so until you can get the price, the supply-demand equilibrium to intersect with each other, they're not going to return to those jobs that they were doing pre-COVID. So I don't think people are sitting at home, Scott. I'm just never going to buy that argument.
Well, maybe there's a multitude. Maybe there's a multitude of reasons. I don't think we're suggesting that it's the only reason because of the government support they're getting, but I think it's part of the punch bowl, if you will, as to why we're witnessing that story.
There's always a percentage of people like that, but I just don't think it's the greater totality. But if you're making the point that as the economy starts to accelerate, people will lift the wage ceilings that they have to get people back to work, they will. That will start to show up in the Fed's data, and that will raise alarm bells. You'll start seeing tapering, and you'll start hearing whispers of rising rates. But remember, we had rising rates for a 24-month period of time, and it didn't necessarily impact stock prices. If anything, the stock market was still going up. And so I'm not super worried right now. You have had tremendous pent-up consumerism. The last 15 months, many people have been stuck at home, and I think that's going to come out of the can like those snakes used to when we were kids.
Right.
And you're going to see a very aggressive economy over the next 24 months.